Have you ever had that feeling that your hard-earned money is just melting away, especially with inflation? Well, what if there was a completely different way to play the game? Today, we're going to break down Robert Kiyosaki's incredible strategy for not just getting by, but actually building real wealth when prices are going through the roof.
All right, so here's the game plan. We'll start by talking about the inflation trap that so many people fall into. Then we're going to dive into Kiyosaki's 3 big rules for getting out of it. And finally, we'll talk about the end goal of all of this, what it really means to achieve financial freedom.
So first things first, the inflation trap. This really gets to the heart of the problem we're all dealing with. It's that sinking feeling that every single dollar you manage to save is going to be worth just a little bit less tomorrow than it is today. Kiyosaki kicks things off with this question, and it's a real head-scratcher. I mean, it goes against everything we were ever taught, right? Save your money. But understanding the answer to this is the absolute key to seeing why the old financial rules just might not work anymore. Okay, check this out. This is where inflation totally flips the script. If you're a saver, the cash sitting in your bank account is losing its buying power every single day. But if you're a debtor, with the right kind of debt, the opposite happens. The real value of what you owe actually shrinks. You're literally paying back your loans with future dollars that are worth less. It's a wild concept. So that leads us right into his first rule. This is where we learn how the wealthy seem to be playing a totally different game, using 2 things that, let's be honest, scare the rest of us to death: debt and taxes. This quote right here, this is the foundation of the entire rich dad philosophy. It's not about working harder or earning more money. It's about understanding the system. The wealthy don't just avoid debt and pay their taxes. They actively use them as strategic tools to get ahead. And this table, wow, this just lays out the difference, and it is staggering. So you've got a doctor who earns $1 million. Fantastic, right? But after taxes, they might only take home around 400 grand. Now look at Kiyosaki's method. Same $1 million income, but he legally pays 0 in taxes. He keeps the whole thing. The difference isn't the income, it's the strategy. So you're probably asking, how on earth does he do that? Well, here's how it works. He takes that $1 million in profit and immediately plows it into a real estate investment. Now, the tax code is written to encourage this, so he gets to use things like depreciation to legally write off his taxable income, often down to 0. Then, and this is the crazy part, he takes that asset to the bank, and they lend him even more money against it. He turns debt into a tool to multiply his wealth. Okay, on to rule number 2. And this is a huge mindset shift. This is about getting off that hamster wheel of just chasing a bigger paycheck and starting to focus on what really matters, building your asset column. Kiyosaki's definition of an asset is just so simple and powerful. It's anything that puts money in your pocket. That's it, whether you're working or sitting on a beach. And a liability? Well, it's the exact opposite. It's anything that takes money from your pocket. It's all about which way the cash is flowing. Now, this is the one that trips almost everybody up. Your personal home, the one you live in, every month it's taking money out of your pocket for the mortgage, the taxes, the repairs. So by this definition, it's a liability. But a rental property that pays you more in rent than it costs in expenses, now that is an asset because it's putting money in your pocket. And this little flowchart right here, this is the secret sauce. See, most people get paid, then they pay all their bills and buy stuff, and then they try to invest whatever's left over. The wealthy completely reverse that. They get paid, and the very first thing they do with their money is buy more assets. Then they use the cash flow from those assets to pay for their lifestyle. All right, let's get to the final rule. This one answers the big question. In a world where paper money is losing value, where should you actually put your money? Kiyosaki's advice is clear. Invest in real things you can touch. This chart says it all, doesn't it? The vast majority of people spend their lives focused on their income. How can I get a raise? Maybe I need a second job. But the rich, they flip that completely. They focus almost all of their energy on acquiring more assets. They know that an income can disappear tomorrow, but cash-flowing assets keep working for you. At the heart of this is a deep distrust for what's called fiat currency. That's just a fancy term for government money, like the US dollar, that isn't backed by anything real like gold. Because governments can print as much of it as they want, whenever they want, the value of each dollar you save is pretty much designed to go down over time. And this example with silver just drives the point home perfectly. So years ago, an ounce of silver cost about $1.50. Today, it's worth around $16. But think about it. Did the silver itself really change? No, it's still just an ounce of silver. What changed was the dollar. The dollar's power to buy that real thing got completely crushed. That's inflation in a nutshell. So you follow these 3 rules. You use good debt, you build assets, you invest in tangible things. But what's the point? What's the actual end game? Well, it's not about being a billionaire. It's about reaching a very specific and very mathematical destination. And this is it. This is the finish line. Financial freedom. It's that exact moment when the money your assets make for you every month is more than what you need to live on. The second that happens, working becomes a choice, not a requirement. You know, what I love about this is that it's not some vague, fuzzy dream. It's a number. It's pure math. If your monthly bills add up to $30,000, your entire mission is to build an asset portfolio that generates $30,001. That one extra dollar means you've won. You are officially free. And that really brings us to the final thought here. Knowing the playbook is one thing, right? But actually putting it into action is something else entirely. And it always starts with that very first step. So the question I'll leave you with is this: what asset will you build first?